One of the fastest way traders lose money is by getting to false breakout. They see a trade they think they like, they see it breaking below a key level, and they enter that trade for whatever reason, only to come back to it later on and is right back the opposite direction, hitting their stop loss. I'm gonna show you today how to avoid getting into any kind of false breakout, any kind of trade that don't look perfect. I'm gonna teach you my star strategy, simply how to avoid that. If you are new here, my name is Devin Trader. I trade using pure price action, breaking everything down, super clean, super simple. I made multiple six figures, been full-time trading now for over 7 years. So this right here is really going to help you out. Today I'm going to break down what false breakouts are, why they happen, and an exact filter I use every single day to avoid them getting into the market so I don't get trapped into a trade that's not going to go in my direction. So first thing is first, right, guys? If we're seeing my chart right here on my screen, we can easily see that this right here is a clear past level of resistance. Even seeing how I made an evening star pattern there, how it came here before and went to the downside, came right back here, made an evening star, fell to the downside, and look at that perfect entry at 9 a.m. you could have got into after that evening star. But right back to it, we can simply see how every single time price action is coming to this level is always going right back to the downside. Now, same thing here. We see how this right here will be our main level of support. I do notice we have these two kind of small levels in between, but that's for another day, another story. I call that a kind of mid-level. It's a level that did happen. It's just not super significant to even think about, right? But that's for another video. Right back here, this is our main level of support, okay? Our main level of support. And we're seeing this right here on USD CAD. We can tell that it's somewhat in a range, right? It's going back and forth, back and forth. So when you have a ranged market, you're always looking to get in for a sell at a level of resistance, and you're getting in for a buy at a level of support when you're in a back and forth ranged market. You never want to get into a trade in between the middle of a range and market, because that way you're kind of going for the same profit as much as you're risking, and going for that a one-to-one ratio trade just doesn't make sense, right? So you never want to enter a trade in the middle of a range, or you want to try to avoid doing so. When it comes down to a false breakout, notice how this right here is our key level of support. When price action broke below this level right here, right? When it closed below that level, that was a breakout. That was a breakout below the key level of support. Now, here is where things kind of get tricky at. When people see this big red bar breaking below the level, they get kind of impatient and they enter that trade super fast and super quickly without really knowing what's truly going on overall. So every single time, right, we know when it comes to our method, our strategy, the way we get into the market, we always look for a breakout first. That's step one. But what comes after we have a breakout? A pullback. You are correct, right? After we look for our breakout, we are excited. We are interested now in looking at this trade, but it doesn't mean we enter because we feel going to keep on falling, or vice versa. If it's breaking above a level and you see a key breakout, it doesn't mean enter because you keep on feeling it's going to go up in that direction. Every single time you take a trade, you're always going to get in when it comes to your strategy, your technique, your method, your criteria for entering the market. For us, right, is breakout, pullback, morning star, or evening star on the 8 or 4 hour time frame at 9 a.m. or 5 p.m. in the afternoon. You always got to wait for that. You're never going to enter a trade just because it broke below a level or above a level. If you do that, you risk of getting into a drawdown or a pullback, right? Because after we have a breakout, a pullback is going to come next. So very much be patient, right? Do not get into a trade super quickly whenever you see a massive bar falling down and you have that FOMO, that fear of missing out, and you hop into the trade only to see that it go right back the opposite direction, right? So really keep that in your mind, guys, okay? So seeing this right here, price action broke below the level. When it closed right here, that was the breakout, right? When price action kept on going down, that's perfectly fine. What we need to see next afterwards is a pullback. So when price action pulls back to the same level, we then expect, right, to make a evening star so for a confirmation to go for a sell, right? So we're looking for an evening star on the pullback, and then boom, we get into our sell. But look at this, right? When it pulls back, it just keeps on going back up above the previous level. So remember that, right? Breakout, pullback pattern, you're looking for a sell. In this case, when it broke below the level, that's the red. On the pullback, it doesn't reject this opposite level. It keeps on breaking above that level. So remember, every single time, this is how you avoid a false breakout. Like this right here would be a false breakout. It breaks below the level, is going down. You, as a new trader, believe it's going to keep on falling, and you don't want to miss out because you've seen this big red bar push all the way to the downside. It's keep on going, and boom, you get into a sell. Only to come back the next hour or so is right back the opposite direction, and now it's going right back up. So remember, guys, right? Any given time you have a breakout below a level, you always want to wait for that pullback to the same exact level before you kind of hop into that trade, right? So breakout is step one. Pullback step two. On the pullback, you want to see rejection at that level. If you do not see rejection, you're not going to get in for that sell. And that rejection you want to see is an evening star or bearish confirmation. Now, in this case here, right, watch it. It breaks above the level, step one, pulls back to the level, step two, and this is where I see that rejection happen at. Now watch closely here, a little bit more advanced right here. Watch closely. This is the 8 hour. If I go down to my 4 hour, same exact thing. It breaks above the level, pulls back to a level, but look at this. It makes a morning star pattern, and boom, that's how you get in for the buy. Like when you would have saw that in the morning time by using a 4 or 8 hour, that's how you would have made that trade right there at 9 a.m. Stop loss would have been below the level, and you would have made all that profit back to the past level of resistance. Look how simple that is, right? In this case right here, we had everything we needed. The breakout, the pullback, as well as the pattern before we kind of just hopped into the trade. So you see what I mean now? Over here, during that false breakout on the pullback, it doesn't reject, right? It just keeps on going up. So once it broke back above this key level here, right? Breakout, pullback, pattern that happens at 9 a.m. Wednesday, May 6th. That's how I'm getting into the buy. Just that simple. Stop loss below the level or below the pattern. So guys, this right here is how you avoid getting into false breakout. Let's go back and recap real quickly. When price action breaks below the level, that's fine. You then want to wait for a pullback to the same exact level, guys, right? But on the pullback, you want to make sure you see rejection. You never want to get into a trade because it's breaking below a level or above a level. You want to wait for rejection first before you just hop into the trade. Any given time, guys, you're seeing this stuff happen in the market. Take your time with it. Fully wait for the whole entire setup to take place before you hop into this trade. If you do that, you're going to find so much more success being a trader in the forex market. You always want to wait for everything to take place. You don't want to wait for just one part of your technique to happen. When you're doing that, you're not really getting in for a strong chance of being profitable on that trade. You have a method, you have a technique. Breakout is step one. Pullback is step two. Pattern is step three. You need to see all three steps to happen before you enter a trade, guys, right? So on that pullback, the rejection is very much important. When pulling back to a level, you need to see bearish rejection. In this case, you're going for a sell, of course. So I need to see an evening star, a bearish doji, a bearish engulfing, anything to tell me that is going to reject this level and go back to the downside. And you can see very much here how on that 4 hour, we have the breakout, we have the pullback, beautiful morning star pattern, entry at 9 in the morning. I mean, that fits our strategy to the T, right? Breakout pullback pattern, and it happened at 9 a.m. We got to enter that trade, and you see how perfect that trade went, right? Right back to that past level of resistance. So, guys, I hope this right here help everybody out. If you got any kind of questions, put them in the comments. But I'll see you next time, guys. Have a great weekend. I'll see you later.